Well, the COVID pandemic has driven something of a municipal bond boom as borrowing reached a 10-year high in 2020. Bonds for a new project reached $250 billion last year, driving total muni debt below $4 trillion for the first time since 2013. But do low rates and narrow credit spreads make a risky environment for investors? Joining us now is Chris Johns, Aquila Family Funds portfolio manager. Chris, it's nice to talk about something other than game stunk for once. Let's talk about this. Listen, we got the prospect of potentially higher taxes in many forms coming. Munis should be really attractive, but I know a lot of people are scared of some of the risk because of, tax. Everything is down, right? Tax funds are down. Where are some good investments in the municipal bond market right now?
Right. Well, I think the one thing that we've learned in this current environment is that it's kind of reinforced the notion that it's very important to know what you own. The pandemic has had a very wide variety of effects from state to state and from municipal bond sector to a municipal bond sector. So credit research is really, really important these days to handle that. One of the things I think that's important to know about municipal bonds is that they're a lot different than corporates in the sense that the way they borrow money is really different. They borrow money over a long period of time, say 20 to 30 years, with a level debt service schedule because they have to balance their budget every year. So even though there has been a big supply of municipal bonds, it's done fairly responsibly, especially when you include the fact that in the last 7 years, roughly somewhere between 20 and 50% of total issuance has been refinancing of higher interest rate debt, which you could argue is responsible behavior by muni issuers. So it's real important to understand those things. Many times the issuers need voter approval too.
Well, the 10-year is going to give me less than 1%, negative with, of course, inflation, real rates. Chris, what would be the median tax-free or almost tax-free return on sort of a, quote, average muni bond?
Well, right now, if you looked at say a 10-year AA rated muni bond, the yield on a bond like that would be about 85 basis points. So as you would expect, slightly below the Treasury security. But the taxable equivalent is still an attractive rate. So, if you try and compare it to a taxable bond, the rates on tax exempts are still pretty attractive. In our world, we manage single state municipal bond funds, which makes it even more so because you get the advantage of exempt from both federal and state income tax. So although the number may seem small, the taxable equivalent is still quite attractive.
Shepard Smith here. Thanks for watching CNBC on YouTube.